Let's talk money.
Welcome back. You're with us on Let's Talk Money. And this week we are asking whether human behavioral biases have a way of complicating the returns that we mutual fund investors make, especially when it comes to sectoral and thematic funds. We have some questions coming in. And of course, Kaustubh from Morningstar is here to answer them. So, Kaustubh, get ready. We have Samrat with us on the phone line now. Samrat, hi. How can we help you?
Hi, I'm Samrat from Bangalore, and my question is that till few years back, PSU stocks as a category were laggards. But in recent past, they had a bull run. Is the best time behind us, or there will be extended outperformance cycle in this category? Should I invest as an SIP investor?
Samrat, there you go. Now you're asking that billion-dollar question, right? That I think everybody on the street has on their mind. And we keep debating this with, guests across the board on CNBC throughout the course of the day. But for what it's worth now, Kaustubh, I think it just kind of, tells us how investors are thinking right now. There's been this unbelievable gravity-defying move in PSUs. Yep. And you keep thinking maybe it's getting excessive. The next year you see another 30%, another 50%. What would your advice be?
It's a very tough thing to kind of, and you're right, because if you just look at the past 1 year returns, it's, I think, 100% plus on the index with a lot of funds, and you feel like you've missed the bus. What do I do? Do I get in? The challenge, and when we think about narrow investing now, PSU obviously encompasses companies from across sectors, but it is still, in a sense, narrower segments,
universe,
right? You have your industrials, your power, utilities, and all of those. So I think it's not a full encompassing universe. And what's happened is that, like Samrat rightly said, 18 to 20, the entire PSU pack underperformed, right? And they were literally playing catch up over the more recent years, and that's why we've seen this significant run up. And especially in certain pockets, some of these sectors itself have done exceedingly well, and they've been large beneficiaries of that, right? Power, cap goods, and some of these. So I think looking at past performance and purely investing basis that, I would definitely not advise that, right? And like I said, what you can do is take a cue from what an active manager is doing, right? Typically, you would see them moving ahead of time, right? You would see that active managers have already started loading up PSUs maybe a couple of years ago.
That's
right. So I would actually, if you're a more nuanced investor, you can actually take a cue from what the professional money managers are doing. Now, I'm not saying that, the run is over. No one knows that, right? Because it's market forces at play. Even the best of money managers can't tell you that now, okay, time's up and let's
you would be wary?
I would definitely be wary. Because like I said, don't do your rearview mirror driving and, buy what's done well. Rather, maybe, like I said, either look at what active managers are doing or, think of something that's underperformed in the recent past. Because, like the chart that we showed a little while back, the winners and losers keep rotating.
They keep changing,
right? Correct. The best advice, to be honest, is don't buy into sectoral thematic funds. But if you do have that urge to try something different rather than the boring diversified equity funds, I would say use some of these tips and tools. Typically, don't buy more than 5% in a sector or theme.
Don't buy more than 5% in a particular
sector or theme.
Okay.
Not more than 10%. So it's almost like your risk capital, so to speak. Right. Be very, very patient with your investing, because if you're buying into a sector that's done well recently, more likely than not, it's going to underperform in the near future. But if you stay invested, when the cycle comes back,
eventually turns, so
you will do well, right?
Okay.
And the best way of doing is SIP, right? Again, you're kind of removing that risk of market timing.
In and out.
Absolutely.
Got that. Okay, some more questions. There's Javal Darji, who's written in, he's put a question on Instagram. By the way, you can reach us on Instagram, on X, on all these social media platforms. Now, he's asking if it's the right time to start investing in the defense sector. There you go. Let me take one more question on similar lines. Akhil is asking that he wants to invest in the Atmanirbharta and the manufacturing theme. He's saying he's missed the bus and he would like to ride on the next one super early. There you go, Kaustubh. I don't need to say anything, right? It really sums up the investment sentiment out there.
Absolutely. So I think, and I'm going to play a little bit of, both sides of the coin here. The first question especially, I'm probably coming from a place because I'm a Fauji kid, right? And I think the one good thing, obviously, what you've seen, it's a slightly different opportunity set. It's a very niche opportunity set. But I think, obviously, the whole Make in India, you're making warships, you're making fighter jets in India, which didn't exist. So it's an interesting opportunity. But should I get in now? How should I get in? I think that is a very, very tricky part, exactly alluding to the whole sector, the sector bets that you want to take. If you do want to take some risk capital, again, follow the same rules that I spoke about.
Not more than 5% of your portfolio
5%,
should be, let's say, defense or any particular sector.
But again, you will have active managers, especially say for manufacturing, right? I mean, you talk to any active manager, they're super gung-ho on manufacturing. So you're going to get exposure any which ways.
Nobody says don't invest in manufacturing. Nobody says defense is a bad theme.
Yeah, absolutely.
But the question is how to play with it
How do you play it, right?
Yeah,
how do you play it?
Yeah.
So if you want to take a very specific exposure, maybe a little bit on the margin, but otherwise your diversified equity fund's going to do exactly that for you, right? Especially a more broader theme like manufacturing, which encompasses, across, say, consumer cyclicals, basic materials, cap goods, industrials, like the whole gamut of that, right? Managers are already doing that. So you don't need to buy a separate fund necessarily to take exposure to that.
Yeah. So I mean, I'll just add my 2 bits. Just yesterday, I was looking at Cochin Shipyard, stock which is in the PSU defense basket. It's gone up 700% in the last 12 months. That's like 8 times. So if you want to, buy into a theme or a stock or, something that's already gone up 7-8 times, you have to perhaps exercise plenty of caution.
Yeah, you got to have guts. I mean,
exactly. It's not for the faint-hearted.
Yeah.
Absolutely. Yeah. Okay, I think we have time for one last question on the show. We have Dipali. Dipali has written in with a query saying that I have some lump sum money to invest, but I'm not sure where to put it in. Dipali, if you've been listening to the conversation, you will know that Kaustubh will tell you to put it in diversified equity funds, right, Kaustubh?
Absolutely.
But tell us which ones, because you guys at Morningstar do a lot of rankings. So what's looking good to you now?
I think just taking one quick step back and just some pointers to Dipali, I think the first thing she needs to think about, what's her time horizon? What's the kind of risk appetite budget that she can take for investing?
Because lump sum at 23,000 Nifty. So
absolutely. She needs to think about that, right? Because, pockets like small and mid caps, while they're great long-term wealth creators, someone tells me I have a 5-year horizon, can I buy small and mid caps? I would probably urge a fair bit of caution on that, right?
Okay.
But that said, I mean, if you were just thinking about some of the stars, the funds that we like, so, if you're looking for a large cap fund, I think one of the funds that we really like is the ICICI Prudential Blue Chip Fund. Well managed, very experienced manager, great team backing him up. So that's on the large cap side. On the the flexi cap side, which goes across the market cap with the large cap bias, there's a Kotak flexi cap. Again, Harsha, extremely experienced manager and very well run strategy. On the mid cap, if you would like to buy, there's the HDFC mid cap opportunities run by Chirag. Again, a superb team sort of running that strategy. So I think these are some of our really like funds in this space.
Okay, so there you go. Some options if you want to stick to plain vanilla, old and boring, diversified equity funds, which is what Kaustubh recommends, then you have some more options there. Well, fantastic conversation, Kaustubh. Thank you so much for taking all the time and joining in. And I think we'll do well keeping some of those caveats and that caution in mind when it comes to sectoral funds.
Pleasure as always. Thanks, Surabhi.
All right, and with that, it is a wrap on this edition of Let's Talk Money. Remember, keep sending us your questions and queries. Whatever you want to know is what we will answer. See you again next week on the show.
Let's Talk Money